im se svima, i malima i velikima, i bogatima i siromašnima, i slobodnjacima i robovima, dade žig na njihovu desnu ruku ili na čela njihova, te da nitko ne može ništa kupiti ili prodati.
Pozdrav dragi narode, dobrodošli u još jednu epizodu Slobodni. Moj današnji gost je jedna vrlo zanimljiva osoba i objasnit će vam neke stvari koje će vrlo vjerojatno mnogi od vas iznenaditi. Vi kao obični građani koji imate neku imovinu, neki novac u bankama, neki koji od vas možda i investiraju na malo i na veliko, su u uvjerenju da rade to za svoju budućnost i da ako uspiju sačuvat će nešto, a ako ne uspiju možda se dogodi i neka sreća. Međutim, nisu stvari baš tako. Zato danas razgovaram sa stručnjakom koji je dugo godina u financijskom sektoru i koji će objasniti stvari za koje niste znali. Od sada nadalje idemo na engleskom. Hello, David Roger Webb. Welcome to our show in Croatia.
Thank you, Andrea.
Please tell us, who is David Roger Webb?
Well, I'm an American. I live in Sweden, and I've lived in Sweden since the last financial crisis. I came for the first time in 2009. But in terms of background, I'm a finance guy. I have worked at a high level in finance, on Wall Street, in mergers and acquisitions in the 80s, in private equity, doing large acquisitions, and then ultimately managing hedge funds, which were long, short equity hedge funds. So I developed a strategy using hundreds of positions that I ran through the dot-com bubble and bust.
And you made a book, The Great Taken. Let's go directly.
Yes.
You said in the book that all financial crises are made on purpose. Can you explain us who is so powerful that can have so many influence to make huge global financial crisis?
It comes down to the power to create money out of nothing. So it's the power of the privately controlled central banks, and essentially all central banks now are controlled by private interests. So they're not run for the public benefit. So how are bubbles created? I'll give you some examples. I was very closely involved in this and monitoring this through the dot-com bubble, for example. So there's something called the velocity of money, which is the relationship between economic growth, real economic growth, and the supply of money. And the central banks are always growing money. Sometimes they are accelerating the growth, and then other times they're decelerating the growth of money creation. And I was studying what was happening incrementally at the margin, in terms of this relationship between economic growth and the money growth. Now, it's important to understand that this velocity of money is what collapsed leading into the 20th century, leading up to World War I. And this was happening when Britain, the Bank of England, was really the banking power. And within the space of just a few years, the Qing dynasty collapsed, the Austro-Hungarian Empire, the Turk-Ottoman Empire, the Russian Empire was destroyed, and the British Empire began its decline. And we are now at a point where this velocity of money has collapsed to a lower level than at any time during the Great Depression and the World Wars. And that's why we are in a hybrid war at this point. So in the late 90s, this velocity of money phenomena had topped out and was beginning to collapse. And in the fourth quarter of 1999, so first there was the Asian financial crisis, which some people may recall in 1997, 1998. And then the central banks started going to very high rates of money growth. And I was able to see that this was out of proportion with any real economic growth. So the money growth was going into creating the dot-com bubble and other crises since. So in the fourth quarter of 1999, for example, at the peak of the bubble blow-off, the Fed, the central bank of the United States, was growing money at a 40% annual rate. So this is on an economy that might be growing 3 or 4% a year in a good year. So the money growth was 10 times what any economic growth was. So now I knew that in real time. I was watching it happen. So Alan Greenspan and the Federal Reserve certainly knew they were creating money growth out of proportion with any real economic growth. So that's one example. Then after the dot-com bust, you get into what was being done with creating asset-backed securities. And this is a little bit of an involved explanation, but it really shows that this kind of thing is made to happen. So during this period, banks stopped evaluating the credit risk of the loans they were creating because they were going to package up these loans and sell them off in pools. So the risk underwriting process was discontinued in banks, and people could people could get loans that had no income, that clearly couldn't service the loan. People could borrow money for more than the purchase price of the home and get cash back at the closing. And of course, we know about the subprime crisis, which is what was being created. So the way this worked, these securities were put into a pool and then stratified. So let's say the top 20% of the pool, and so on, 20%, 20%, 20%, down to the bottom tranche. And the idea was that any defaults would hit the lowest rated tranches first, so that the highest rated tranche could be rated AAA, because all defaults would have to blow through 80% of the pool before getting to the top tranche. Now so there was interest in these top rated tranches, but Wall Street couldn't sell the lower rated tranches. So then they created the credit default obligation, CDOs, where they could lay off that default risk, essentially pay someone to take the default risk. And by doing that, which was done in the derivatives market, they could then sell the entire pool as being AAA rated because they had sold off the default risk or paid someone to take the default risk. Then these pools, because they were theoretically now AAA, and the yields were high relative to government securities, there was so much demand, the central banks were creating so much money, so much liquidity, that these pools were then sold many, many times over on a synthetic basis, also in the derivatives market, which was modeled on these pools that were created in an inherently flawed way with no risk underwriting. So this was done on enormous leverage. Now, I was becoming concerned about this in the early 2000s when global derivatives outstanding were a bit over 100 trillion, 110 trillion or so, 120 trillion. So they were derivatives outstanding in the early 2000s were about twice global GDP. By 2007, 2008, global derivatives outstanding had gone to over 700 trillion. So from 100 trillion to 700 trillion in just 5 or 6 years, based on a flawed underlying process of essentially they created the appearance that there was no risk. And this was engineered. I knew that this was being done, so it was certainly known that it was being done. Then the last piece of it was that who was taking the default risk? Who was crazy enough to sign up to take that default risk? And it eventually came to light after the crisis had become full blown that it was the biggest commercial banks themselves that had set up hedge fund subsidiaries that were taking the other side of this default risk in order to enable the entire thing to happen.
Okay, where you been in last crisis, 2008? We know that they create a big bubble. You were mentioning that everybody could get a loan. I remember these loans were named ninja loans, no income, no assets, and you could get a loan.
Yes.
But American taxpayers paid it with 700 billion. I think in the start this weekend they decided to give $700 billion to the banks to survive this weekend. They said, and after that increased up to 1.5 billion. Where you were then? After that, you moved to Sweden.
Well, I had wound up the hedge funds I was managing because I reached the conclusion that when this collapsed, all of the prime brokers would collapse as well, which is what happened. The biggest prime brokers all were bailed out by the Fed. They were made banks and extended not just billions, but tens of trillions in created money to keep them afloat. So I had made the decision not to participate because if to be short the market, to hedge, to be short the market, you have to essentially you're in debt. You're in a margin position, so you're exposed to the failure of the prime brokers. So this was a period of time when I was really starting to study how to essentially get out of the system and how to avoid the insolvencies. And so in 2008, I saw the first failure of a small broker dealer in which the assets of the clients were not returned to the assets. They were swept to the bankruptcy receiver for the failed firm. This had never happened before. And that's when I really started digging in this to understand what had changed in the legal structure, and eventually went to Sweden because at that time it was still possible to own securities in Sweden and have solid ownership and legal title. It was no longer possible in the United States during that financial crisis.
Well, after that, we get in a decade of very low interest rates, close to zero. And that, as I understand, create additional bubble. What you have a comment on that?
Yes. Well, this is, people have used the term the everything bubble, and I think it's a good description. So the way I describe this to people, it's very simple. If you think of a bond that is a perpetuity, meaning that it has no maturity, because the maturity date complicates the calculation. But if you think of it as a perpetuity, and the bond pays $5, a coupon of $5, and interest rates are 5%, the bond is worth $100 because the coupon being paid is 5% of $100. Now, if you drop interest rates to 1%, the bond still pays $5. Now the bond is worth $500. So it's gone up fivefold in value. And this is essentially what was done to all financial assets. Essentially, all the entire financial system is a big perpetuity. So it drove up the value of all commercial real estate, for example, all rental property, of course, the bond market, but essentially the stocks theoretically are valued based on discounting back future cash flows to a present value. So this created the everything bubble. It's not real wealth. It's entirely driven by dropping interest rates like that. Now we're doing a round trip on that. So if you take interest rates back from 1% to 5%, the value of that bond goes back to $100 from $500. So you have an 80% decline. And in our present circumstance, it's at least that bad or worse, because as you said, interest rates were dropped to zero. So we've seen interest rates driven back up by the Fed very sharply. It's now from zero to 5.25%, 5.5%, and if you notice, interest rates in the bond markets are not coming down; they're going up.
Yes, now we're coming in the present time. We can say in the last 3 years, because in 2019 something important happened, and I have to say, whatever was happening with the Fed was happening also with the European Central Bank. That's important because Croatia is in Eurozone. That's why that concerns Croatian citizens. In 2019, they made agreement, Federal Reserves together with other Federal Reserves in the United States, to put in the market cash around, I think it was $5 trillion, like quantitatively easing too. That means they will start to buying non-bank assets. And they done it just in the spring of 2020, in a moment when pandemic starts. Can you tell us about this?
I have to say I don't have deep insight into that. I don't think I can comment in depth about that. I think what it shows the public through the whole COVID pandemic period, anyone paying attention can see that money creation, there's no limit to the power to create money. We were led as children to believe that the money you borrow the bank comes from someone else's savings, that there's a finite amount of money. That I think people now understand that is absolutely not the case.
Please,
and
just
scale of
no,
money.
I don't think so that all people understand. Can you explain people how banks are making money, exactly producing new money?
Well, banks can, especially central banks, can create unlimited amounts of money. So I'll give you some, and they can also do it for any purpose, and they can do it secretly. So, for example, in the financial crisis in 2008, um, there's in the US, there is what's called a commercial paper market. These are short-term loans between companies that offer a better yield. So it functioned. So these are loans of 30 days or 60 days, and they're regularly rolled over in a commercial paper facility. And there was about 1.5 trillion of commercial paper outstanding. And at one point in the crisis, this seized up. Commercial paper markets stopped functioning. And the Federal Reserve created a special purpose entity almost literally overnight and funded it with $1.5 trillion to liquefy the entire commercial paper market. They also created an entity called Maiden Lane, and this is what they can do is essentially create a corporation, in this case a limited liability company, which was Maiden Lane. They loan the money into this entity they've created that then bought the problematic derivatives positions from the banks. And there was so much of this, they did it another two times, Maiden Lane 2 and Maiden Lane 3. And they made it explicit because they were not going to hide what they were doing. They were going to show people that they had the power to do this. But this can also be done quietly. When Andrea, when you're talking about the power of money or banks to create money, every time they create a loan, they create that money um, out of thin air, and it becomes their asset. That loan they have created, it's something they can sell, they can package up and sell off. It is secured by the borrower's um, uh, ability to repay that. So it's about creating indebtedness, and there it is theoretically banks have a a limited capital, and there's a limitation on um, how much credit they can create. But with the central banks, there's no limit on that.
Okay, and from this reaction from the central banks in 2020, we now have huge inflation. And during this inflation in the last 1 year, Federal Reserves raised their interest rate from, as you said, 0.5 to now already 5.5%. Can you tell us what this can have impact on the financial market?
Yes, well, that will produce a round trip in terms of this everything bubble. Following the everything bubble will be the everything collapse. Things will, so if they've gone up fivefold in value, given the example I gave, this is how you can see a profound decline. Bubbles in the past, whether you're looking at the Nikkei, the Japanese stock market, or the Dow in the 1930s, or the dot-com bubble and bust, you see 80% declines in these bubble collapses, 80, 90%, and many entities, the equity is wiped out. It's so I think we are facing something like that. I think the only reason that it is held up is that there is created money that you can't see, that is being injected into the financial markets directly, that is holding them up. at this time.
And you said in the book that will come deflation before everything collapses. What do you think how this huge inflation will go to this deflation, and in
Yes.
which period it could happen?
Yes. Well, I believe this inflation is artificial. If you look, there is artificial scarcity is being created in energy supply, for example, perhaps in food supply. Of course, there were many disruptions that were created during the COVID period, horrible disruptions. So a lot of this has been made to happen in terms of supply chains and tremendous escalation in energy prices, um, and the narratives around that. Um, so the deflation follows the bust. And I write about this in the book. If people can't imagine that something like this could happen or would be done intentionally, but this is what happened in the Great Depression, and it was global. Um, and I make the case that it's really about producing large scale deprivation. So it's not that they need your money, they don't need your things. What their objective is to maintain their control over everything through um, through this collapse in the power of money to create growth. That's that is what is underlying this, and they've known that this would happen again. This kind of exhaustion in the power of money creation to create growth. So it's a major geopolitical event that we're facing, and we're in this case they are using they're set up to take all collateral, all financial assets. In the 1930s, gold was the collateral backing, and at least in the United States, gold was confiscated. And then they did not use the gold that they confiscated from the public to extend credit and to end the Great Depression. They actually hoarded it. The Federal Reserve hoarded it. They kept conditions tight for years. And I think that is a control strategy.
And now we're coming to something very important. In the moment, if great or huge financial crisis came, people who have investments, who have some bonds, who have some real assets, they think they are secured. They have some deposits. They have some maybe shares of the real companies, what they are bringing dividends, and also they have real estate. But it seems to they are not secured because they use these assets for collateral for something else without their knowledge. Can you explain us?
Yes. Well, what is different this time around, there is a major innovation, which is the severing of property rights to securities. What had been personal property for 4 centuries, and hence they were secure. That's why they were called securities. So this process of severing property rights began over 50 years ago. And the first step was dematerialization. They needed to have securities held in book entry electronic form. And the next step was the creation of a new legal concept of an entitlement. Um, this is a contractual claim to the security, and it's sometimes called beneficial ownership. So you have the benefits or an appearance of ownership. So yes, you can decide when to buy it and when to sell it, and enjoy the gain or suffer the loss from that. You receive the dividends, you receive a proxy and can vote the shares, but the legal ownership is with the entity that controls the security as collateral. And a system has been set up so with the objective of using all securities as collateral. And in Europe, the key thing was in 2014, they implemented something called CSDR, is the acronym, Central Securities Depository Regulation. And what that means is at the national level, you have a central securities depository, which is the electronic record of who owns what in book entry form. But the securities are then by law passed up to a higher level, which is the international central securities depository, which is either Euroclear or Clearstream in Europe. And then it doesn't stop there. The collateral is then transported to the central clearing counterparties, which is where all of the derivatives risk is concentrated. Um, and I explain this in the book. The central clearing counterparties are themselves being discussed as being vulnerable to collapse by people with immediate experience of these things. They're very thinly capitalized. It is understood that they can collapse with the failure of one or two major institutions. And when that happens, in the case of the US, for example, essentially the entire securities complex in the US is housed at Depository Trust Corp, and the entire capitalization underlying that is only $3.5 billion under the entire securities complex. And um, they have made plans and funded it to start up a new central clearing party when this fails. So they're not planning to put more capital up. They are planning for the failure. But the key is when that failure occurs, these secured creditors will take the client assets, the collateral. Um, and the secured creditors are only the biggest banks. Um, and well, I can come back to that if you'd like me to talk more about that, Andrea.
Yes. Well, I would like to ask you, there is no big difference in security if you are very wealthy and you have lots of assets, and if you have really medium amount of assets. Both of these sides are not secured in a case of big financial bust.
Yes. I think it's very important that, I've been around a lot of, professional investors, sophisticated investors that do not want to believe that their funds are vulnerable, but they certainly are. In the Federal Reserve, there's a key document in the mid 2000s when this system of severing ownership rights was begun in the U.S. and then pushed globally literally by the US Department of State to produce harmonization to this system globally. And in Europe, something called the Legal Certainty Group was set up. And what they meant by legal certainty was making it legally certain that the secured creditors would take the client assets. And this legal certainty group sent a questionnaire to the US Federal Reserve. It was answered by the New York Fed. And this is irrefutable primary source document for this. So what I'm describing here is not conjecture. It's important for people to know that. Um, and in that disclosure, in addition to explaining the effect of entitlement, severing the property rights, it discusses that all securities are held in a pooled form, including segregated securities. So institutions that have said we don't want our securities loaned out, and they may even pay more for custody because they're not allowing theoretically not allowing their securities to be exposed to this. By law, they are in the same pool with all the securities that are being used, and they are used without restriction. The custodians are allowed to, they refer to it as the longstanding practice of self-help. They can take the securities out of these pools without restriction. And it's clear in these various documents that the objective is to utilize all the securities. So, and it is clear that the Fed responds to this in a number of ways, saying that even if an account holder has been told that their securities are segregated, by law, they are only entitled to a pro rata share of what is left in the pool after the secured creditors take what they have been assured legal certainty to.
In simple words, nobody is safe. Sorry, nobody is safe.
Yes.
And in future new financial crisis, you said they done it all until now, all crises on purpose. That means that now they can make a new financial crisis, and this crisis, everybody will be left without assets. Only few of them will have everything, as I understand well.
Yes, absolutely. But I want to say that I believe it's important to note that this process was begun over 50 years ago, and that the people that design this, and it is a very intelligent design, but the people that design this are dead. They are gone. There are people that have inherited this situation. And I think it's important to realize, in a sense, they are trapped in this as we are, because it will ultimately be very bad for them. This is just a kind of inevitable logic that they have pursued and executed on. Their logic is that we well, the people can't be allowed to determine their own reality. Someone has to do it for them. And if we don't do it, someone else will. So we're going to do it. So it is this kind of insane logic. So it's intelligent, but it's insane. It's a very bad idea. And now here is the hope. By exposing this, and it's really the first time this has been laid out in a way for people to see the whole of it. It allows people to realize all the way to the top of the system, that they will not be protected. It has the potential to unite people in a common cause to say we can't allow this to happen. Um, it is all a construct. None of this is even real. There is a real world that is benevolent. Um, we need to help people to see this all the way to the top of the system, that they must withdraw their support for this.
What is your opinion? Are they going to make huge financial crisis, or it will be partially separated in country by country or currency by currency? Because if it happens to all of us in the same time, for sure they will bring up revolution. But if they'll take step by step, then they can, just like in pandemics, when they made these measures step by step, people will not believe this is happening when it happens to somebody else. They will start to believe
Yes.
when it happens to their own account. What do you think?
I agree with what you're saying, but I have to say, there's a point in the book where I'm talking about and exposing the collateral management systems, and this is from a Bank for International Settlements document, which shows the flow of collateral from, as they explicitly say, the collateral givers to the collateral takers, which are the secured creditors at the central clearing counterparties. And it's clear from this extensive document that their objective is to, now this is 10 years old, so they've had time to implement all of this. The objective has been to make this fully automated, global, and something that would function during a crisis, that would automatically transfer the collateral up to the central clearing counterparties. So I think it is intended to be a global crisis. And it's something that will unfold quickly. There will be panic, and they will use, as they always do, the rationale that, well, of course, these biggest banks have to survive, otherwise, how will society go on? They 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 will create this argument that these entities have to exist so we can start providing loans again. You can borrow money from us again. So it's I'm not saying it's smart. I'm saying it's insane. But I think the intention is to make it all happen globally rather quickly.
Great.
And if you look at what was done in the 30s, it was global. It unfolded over a number of years, but the scariest point of it can come rather suddenly.
That means they are ready to make it globally. They don't need to make steps. Then they can come with a solution. And that solution could be central bank digital currency, what will give us new chance to build up a new financial system.
Yes, I think we can see that they have really worked at this. Central banks around the world are prepared to deploy central bank digital currency, and I think uh, people will. I know this from studying the Great Depression. I talk about it in the book. Um, my parents and grandparents lived through it, and I was asking my aunt what happened, and she said, "Well, suddenly no one had any money." And what she meant by that was literally nobody had any money. If you close the banks suddenly, all of them, and people lose all their cash in the banks, but their debts are not canceled. Their debts continue and are consolidated, and only certain entities are allowed to reopen and to collect on those debts. People are suddenly without any money, and so they've done this before. And you can imagine the answer will be, well, you have a smartphone, you download this app, and you'll be able to get some tokens that you can use to buy milk. Um, and from that point, you're really trapped because you have to eat, so you have to go along.
Yes, and they can call it, for example, universal basic income. And this universal basic income can save you. Or for example, if you have some deposits and if you accept digital wallet and digital money, maybe you can save some of these deposits. That can be their offer. But we are here to expose this, as you said. We are here to tell the people that this is happening right now and this is really realistic, and that concerns every one of us. Doesn't matter
Yes.
if we are wealthy or we are living from month to month. Can you tell us, for the end, what could be a solution for the ordinary people, how they can reduce risk from this big event if it happens?
Yes. You know, I think that clearly people should sell whatever they need to sell to pay off debts. And I know people that have, for example, sold their homes and are renting just to be sure that they don't have a mortgage. That's one thing. A second thing is, I say, is to get real. Avoid financial assets. Of course, you know, I have money in banks. I know I'm going to lose it at some point, but here I'm still functioning unless this can be stopped. Unless this can be stopped. But I have moved increasingly to farmland and the ability to live and produce food and have a greenhouse. And through the depression years, both sides of my family, they had been well off. They were very capable people. They had no debt. They had no debt in their practices or businesses or on their home, but it was still very difficult for a number of years, and they had to have recourse to relatives that were producing food just to make ends meet. So you know, you look to your resiliency, but ultimately we have to understand there is no place to hide. You can't run from this. It is time to face up to it. And that this is the bright spot here. We've all been subjected to this divide and rule, making people fight each other. This is something that can unite people all the way to the top of the system. That's what we must do.
Thank you, David. It was really a pleasure. Thank you for your work. And we will try to expand your word, because if we made more awareness, then maybe we can stop it.
Yes. Thank you, Andrea. Thank you.
Evo, drage narode, preporuka je pročitajte knjigu. Što gospodin Webb kaže i čime potkrepljuje svoje tvrdnje. Vi koji ste stručnjaci u financijskom sektoru, vi ćete bolje znati koliko je stvarna opasnost ove koje smo mi danas nabrojali i o čemu govorimo. Također znate puno bolje i o financijskim instrumentima, derivatima, kamatnim stopama i kreditima. Raspitajte se dobro, razgovarajte s svojim financijskim savjetnicima i provjerite da li je uistinu ovako ozbiljna opasnost od budućeg scenarija u kojem, čini se, nitko neće proći bez velike štete. Čak ni oni koji danas smatraju da su bogati i da imaju dovoljno imovine da više ne moraju ništa raditi, možda izgube sve. Možda nakon toga rješenje koje dolazi je bolje nego što ga sad imamo. Ja u to ne vjerujem. Međutim, moramo i o tome razgovarati jer financijska sigurnost koju svi želimo i koju svi želimo za svoju obitelj nije tako jednostavna kao što nam se danas čini. Nije dovoljno imati veliku imovinu, puno novaca i reći moja obitelj je osigurana. Potrebno je puno toga znati što je opasno za tu imovinu i pokušati spriječiti da se velika šteta ne dogodi. Nadam se da ste bili zadovoljni sa današnjom emisijom, sa današnjim gostom. Hvala vam lijepo što nas pratite i vidimo se uskoro u jednoj od sljedećih epizoda.
Nitko vas neće natjerati da se poklonite zvijeri, učinit ćete to svoje voljno, odbacujući vjeru. Bićete laka meta za zvijeri, jer se niste podredili vjeri. Ako se ne podredite vjeri, podredit ćete se zvijeri. Toliko ćete se suobličiti sa ovim svijetom, da nećete ni prepoznati da ste u zabludi. Biće to najveća demonska prevara ikada i pravedno zaslužena osuda nad nepokajanim grešnicima.
Gdje su svi oni koji su nas vjerili?